It's Friday, January 17th, 2020. So another very interesting day on Wall Street. Markets are at all-time highs. Dow Jones closes up another 50 points. What we are watching, in my opinion, is quite literally criminal. It is really, really sickening to watch this illusion that is fooling so many people, this trickery. And so many people are going to pay the ultimate price here. But if there's anything that we can get out of this that's positive, that gives me hope, it's that there's so many people like you. Reading the comments the last couple days, there are many people out there that are awake and aware of what is taking place. And that just gives me confidence that, there is some hope left, that there are some good people, that there are some smart people and awake people out there that aren't being fooled, who are prepared for the implosion that is getting closer every day. Not everybody is a sucker. Not everybody's being bamboozled. There are people out there like you and me who are quite aware that these markets have no fundamentals. They are fake. And, the first thing to do when there's a problem is admit there's a problem and call it out. And I'm calling it out. This whole thing is criminal. It's fake, and it is going to destroy a lot of people, and it may just destroy this entire country. But, the first thing we have to do is admit that there's a huge problem here, and we're not going to stop it. We're not going to fix it, but all we can do is prepare for it. This problem is going to have to fix itself by imploding and just wiping out all of this bad behavior, all this irresponsibility that's been taking place, all this corruption, all this manipulation, and everything that's going on. It just needs to be wiped out. There needs to be a cleansing that takes place in these markets, and sooner or later it's going to happen, because the markets are going to get sick and tired of it. And the truth of the matter is, reality will come at some point, and when reality comes, people are going to be absolutely taken by surprise. And many people are going to find the truth that they've been sold a bill of goods, that the paper that they're holding, their pensions, their 401ks, they're worthless. It was all fake. It was all illusionary. It was promises that could never be kept. But we're all going to feel the pain, ladies and gentlemen. It's coming, and nobody's going to avoid it. And the only thing you can do is prepare the best that you can. But we look at the data, we look at the facts. There's such a contradiction with Wall Street and the real economy and what's happening in real life. Labor market hits a brick wall. Job openings crater, the most since the financial crisis. Back in November, we added 256,000 jobs. If you remember, quite a bit of those were from the GM employees that were coming off the strike, getting back into the labor force. But today, the JOLTS report showed a vastly different picture. Job openings in November plunged by a massive 561,000. This was the biggest sequential drop since August 2015 and the biggest annual drop since the financial crisis. Now, are there jobs out there? Yes. Are there a lot of jobs out there? Yes. But ask yourself, what are the quality of these jobs? We need more quality, not more quantity. I will take quality over quantity any day. How is this empire, this economy, the U.S. empire, the U.S. economy, how is it going to progress? How is it going to hang on by creating 80% of these new jobs being in the service sector, paying minimum wage, maybe $10, $12, $14 an hour? I mean, are we going to base our whole economy on medical assistants, coffee makers at Starbucks, Uber drivers? I mean, our whole economy, 80% of the jobs we are creating are service sector jobs, jobs in hospitality and leisure. These aren't high-paying jobs. We're losing those. We're losing more manufacturing jobs. I think manufacturing makes up about 11 or 12% of our GDP. That's nothing, and it's continuing to shrink. We're losing our mining jobs, our manufacturing jobs, jobs that are paying. We're losing good construction jobs. So, what do? We import slave labor from other countries to come over in our construction fields. And, now a carpenter can barely even make a living. They're making, a good carpenter today probably makes $12 or $14 an hour if they're lucky, at least here in the state of California. So quality of jobs is poor, and good jobs are getting harder and harder to find. But again, just going back to this article, 500, and this is in November, 561,000 job openings plunged. So that's a lot. And I believe that now in 2020, we are going to see an uptick in unemployment. And most of you know, watching this video, because you're very awake, that these job numbers, these unemployment numbers that we're getting are very manipulated. We know that the real unemployment rate is not 3.6%, it's much higher. And we know that roughly 1 million people, or excuse me, 100 million people in this country are not working. And yes, there may be certain reasons for some of those people, but there is a huge number of people in America not working. And the people that are, think about it. How come people are having to work 2, 3, and 4 jobs to get by today? So again, we have the quantity. Anybody can work at 7-Eleven. Anybody can work at a convenience store. Anybody can work at a gas station. But is that going to make your rent payment? Is that going to be able to support a mortgage? Is that going to support a family? Service sector jobs are not going to support the household here in America. And this is why people are working 3 and 4 jobs, because these jobs aren't paying. We need real wage jobs here. U.S. industrial production suffers worst year since 2015. Market was up today. Ask yourself, when you have industrial production suffering like this, the worst since 2015, how can the stock market be up today? Does U.S. industrial production not play a role in the stock market? Apparently in 2020, it does not. This to me is completely abnormal. You have to understand that, again, these markets are not real. They are fake. They are an illusion. And that the banks are running everything at this point. The Federal Reserve is running the stock market. The Fed is pumping trillions of dollars into the debt market, into the stock market, into these financial institutions. And many people are being fooled, and they're being suckered into these markets. They're being suckered into the real estate markets. And I know many of you, from what I'm reading in the comments, are very aware of what's going on. U.S. to start issuing new 20-year bond in first half of 2020 to fund soaring deficit. Good luck with that. This is interesting. So I guess this is going to help fix the debt. 20 years. Think about that. A 20-year bond. Just think of the variables in 20 years. There could be a lot of bad variables that can take place over a 20-year period. Who would want to take on 20 years of risk? Ask yourself. I wouldn't want to take on 10 years of risk, 20 years of risk, 30 years of risk, let alone 5 years of risk, etc. How many of you believe the US dollar will even be around in 20 years? Think about that. People are going to buy 20-year bonds. And I truly believe that the US dollar, it may be around, but it certainly will not be the world reserve currency in 20 years. I believe that there is a very big chance that the world reserve currency will not be the US dollar bill. The 20-year bond is going to be between the 10 and the 30, so it'll pay probably around 2%. So think about that. This will pay you less than the rate of inflation. And you have to ask yourself, I know I'm asking, who would do this? Maybe the people who would buy Tesla at $500, that might be the person that would do this. But these people are putting a lot of faith in a lot of things. And I can't imagine anybody would tie their money up for roughly 2% for 20 years. I mean, it's a no-brainer. You buy gold, you buy silver, and you have a hard, tangible asset in your hands that is going to outperform that 20-year bond astronomically. Zero hedge today. No instant push in shipping demand from phase one trade deal. It's an interesting article. The Baltic Dry Index, which trends rates for capsize, Paramax, and Supermax vessels that ferry dry bulk commodities across the world, has plummeted in the last several months. Again, ask yourself, if fundamentals played any role in the stock market, why would it be up today when the Baltic Dry Index is plunging? The synchronized global downturn is expected to persist into 2020. We will see if the phase one deal has any effect in the near term. Again, right now, there seems, from what I'm reading, to be some hiccups with this phase one deal. There is no way China is going to be able to do what is in this deal. They are not going to be able to buy the goods and services that they are promising. They've already made promises and obligations to other countries that they're not going to just drop and come right over to the United States. And if we look at what they were buying a couple years ago compared to what they're promising to buy now over the next 2 years, it's absolutely impossible. So good luck with the phase one. I hope that at some point, somehow, it helps America. I don't want to see this country fail. I really pray that something out of the phase one works. I pray to God that China sticks to the agreement. But I know they're not going to, and most of you know that they're not going to either. They're already cutting too many deals around the world, and they're needing America less and less. They're doing everything they can now to be less dependent on America, and they're opening their doors to the world: Asia, Latin America, Central and South, Europe, the Middle East. I mean, think about it. Do you really think they want to deal and be told what to do by America? Do you think they're really going to tolerate that? Absolutely not. CNBC today reports Boeing found another software issue with its 737, but they're making necessary updates and keeping customers and suppliers informed. Stock market does not flinch. Boeing is down about 2.4% as I make this video. Stock market doesn't even flinch. Well, if there was any news that the market did like today, it was this one. Housing starts soar to highest since 2006 as permits plunge. You know, this reminds me a lot of 2006 right here, at least here in Southern California, when the builders were going crazy. Everything was going nuts out here in 2007. Nobody knew what was right around the corner in 2008. And I remember talking to some of these builders, and I mean, they were almost bragging about how many homes they were going to be building, how it was never going to end. I remember being at Sullivan's Steakhouse in Palm Desert, California, talking to two of them, and I had already seen the market turning. I had friends heavily invested in the housing market, already knowing what was coming, and the writing was on the wall. But again, there were people who were ignoring the warning signs and bragging about how nothing could stop it. And within months, these projects, these housing projects out here in Southern California, out here in the desert, were ghost towns. And it's, you know, people think it can't happen when they see, you know, all the workers, the trucks, carpenters pounding nails, houses going up, you know, by the boatloads. And one day it all comes to an end, and it gets ghostly quiet. And those people thought it could never happen, and it happened in the blink of an eye. And when I read articles like this, it brings me back to 2007. It brings me back to Sullivan's Steakhouse when I was sitting there talking to two builders who were out here building homes, telling me that they were planning on building another 500 homes. And probably within 4 months, the implosion hit and it was game over. So it can happen very, very quickly. But these builders are once again gambling, and so is the home buyer. And both of them are being very foolish right now as this housing bubble gets absolutely out of control. And again, watching some of the business shows today, I'm hearing more about creative loans, exotic loans, and we know what this means. Here comes subprime, and as we know, they have loosened up over the last year, and we're going to see more people buying homes that should not be qualified to buy homes. They're going to push this real estate market as far as they can, just like they did before the 2008 crash. And again, they're going to ring in. They're going to call it something else. They won't call it creative, exotic, and they're certainly not going to call it subprime, but they're going to put a name on it. And just like you can't say it's quantitative easing, but it is, you can't say it's subprime, but it is. Look at what's happening in the auto market right now. They're doing whatever they have to get these cars off the lots, and they're going to do whatever they have to sell these houses. This was on MarketWatch.com today, the U.S. housing market crash. Jumbo mortgages are haunting the housing market, and things could get really scary. The U.S. housing market crash a dozen years ago is evidently history for many mortgage lenders and buyers. You know, to me, it feels like it was yesterday, and how quick we forget what happens here in America. We forget history so quickly, and people have already forgotten what happened in 2008, and they're going to pay a real severe price for it, because the next one isn't going to be 2008. It's going to make 2008 look like romper room. Mortgage underwriting standards have eased considerably in the past couple of years, and I believe that they're going to ease much more as lenders become more creative to sucker more unqualified people, more unqualified buyers into these home markets. One of the largest mortgage originators now offers a jumbo mortgage of up to $1 million with only 10% down if you have a FICO score of at least 760. You can get a $3 million loan with 30 to 40% down. One smaller home lender is offering home buyers a loan as high as $2 million with a FICO score of 640. This score was considered subprime during the bubble years in the early 2000s. Jumbo loans will become a jumbo problem, just like they were back in 2004, and 2005, 2006, and 2007. About $3.1 trillion of jumbo mortgages were originated just from 2004 to 2007. Just reading a little bit of this article, and I'm just going to skip through it a little bit. There were far more originators for refinancing than for purchase. The vast majority were cash out refis, where the new loan was often substantially higher than the original mortgage. 1.6 million California loans originated between 2000 and 2007. Published by the San Francisco Federal Reserve Bank reported that 1/3 of all those loans were large jumbo mortgages. In this article, there's a really interesting fact here. It says here there is a large number of delinquent jumbo loans out there. Mortgage servicers have consistently maintained the strategy of not foreclosing on these jumbo loans. Many borrowers have not paid in years as a result of the jumbo loan mortgage market. And again, it is a ticking time bomb. But just think, there are people out there that have not paid in years because the banks don't want to take these properties and put them on their books, or put them back on the market, and having negative effects on the real estate market. The article goes on to say that back in 2010, the banks supported and really manipulated the housing market by not placing expensive homes on the active market. We look at back in 2010 in Orange County, California, where I just made a video a couple days ago, there were 6,270 repossessed homes. They'd only put 227 of those homes on the market, and only 85 of those 227 were over $300,000. In Cook County, Illinois, there were 28,829 repossessed homes in 2010. They put 1,292 on the market, and only out of that 1,292, only 29 were over $300,000. So very interesting to see what they're doing. But again, it's just more manipulation by the banks. They manipulate the real estate market. They're manipulating the stock market. And again, it's another reason to be preparing. This is not going to last forever. We don't know how long it's going to last. There are people out there that believe this will go on forever. And I promise you that is not going to happen. So I'm going to wrap it up right here today. Have a phenomenal weekend. For the people out there that believe this insanity can go on forever, I want to leave you with this. The larger the balance of debt becomes, the more economically destructive it is by diverting an ever-growing amount of dollars from productive investments to service payments. The bulk of U.S. debt has been scrutinized on increases in social welfare and debt service. And we are getting a negative return on our investment. This will not last forever. It is absolutely mathematically impossible. This whole thing will blow up, and you need to decide what you're going to do about it, how you're going to prepare. Because by doing nothing, you will guarantee failure. By doing something starting today, you are guaranteeing that you are going to survive what is coming. But first off, you better realize that there's a problem. And you better realize that this is impossible to go on forever. It is mathematically impossible to go on. It is unsustainable, okay? And once you admit that to yourself, you need to start preparing. God bless every one of you. Have a phenomenal weekend. Give this video a thumbs up. Share it with everybody you know. Make sure you're praying for this country. I'll talk to you very soon.